Hello, fellow Ghost Traders. It's Sunday, April 17th, 2023. It's time for the weekly market update. Last week's trading was mainly positive, even though Friday's trading had a bit of a bearish bias. We had the start of the quarterly earnings reporting cycle, which should occupy the market's attention for the next few weeks. Given how volatile the market has been this year in 2023, it might surprise many that the market is up overall for the year, with the NASDAQ leading the charge with a 15% jump since the start of the year. One of the items that concerned the market on Friday was comments from FOMC voting Fed Governor Waller. Mr. Waller stated that he feels that the Fed has not made much progress in fighting inflation and thinks the FOMC may have to do more interest rate hikes than currently projected. Since the happy path for the market would be that there is just one more interest rate hike in May and then the Fed is done for the year, these remarks kicked off a bit of selling during the rest of the day. For most observers, it's pretty apparent that inflation is stubbornly hanging on, but many in the market have really been focusing more on the small drops in the inflation rate over the last few months. This will continue to be a major, if not a significant factor moving into the future. Along the same lines of economic concern, the March retail sales numbers were also more bearish than expected. Sales dropped a complete 1%, with most estimates coming in the range of about 0.5%. It shows that consumer spending is declining more than expected, which amplifies concerns that we may eventually go into recession instead of the hoped-for soft landing that the Fed has been hoping for. As to earnings, several financial stocks reported last week, and overall the market was pleased with the number that they saw. Some stocks have benefited from positive reports, included Citigroup up 4% and JP Morgan Chase up almost 8%. While this is good to see in the first earnings reports of the cycle, plenty of companies are still to report, and the market will be quick to punish those stocks that don't meet current expectation and current projections. With all the bearish factors out there to counterbalance good earnings, we expect that this earnings season will have plenty of ups and downs every single day, depending on how that day's earnings reports are viewed. In conclusion, there's going to be plenty of quarterly earnings reports to watch this week, and traders should expect to be the main focus of the trading action. This week's important report should include American Express, Tesla, IBM, Morgan Stanley, Goldman Sachs, and the Bank of America. Dow Jones. The Dow Jones closed at 33,886, up 401 points for the week. The Dow continues to be stalled right below resistance at about 34,100. The indicators are still on the bullish side, but somewhat extended and overbought. So we'll keep a mostly neutral bias on the Dow, with the expectation that unless earnings season is a significant surprise to the bullish side, we likely will not break the resistance right now. On the NASDAQ closed at 12,123, up 36 points for the week. The NASDAQ has been staying close to 12,000 line for a couple weeks now, and with the indicators rolled over the bearish side, we are not expecting to push much upward beyond that in the short term. Earnings are always a wild card, can quickly change the bias, so we'll keep a short-term neutral bias for now. That's it for the market update for this week. Until next time, fellow Ghost Traders, go out there and make today your masterpiece. Until next time, talk soon.